and your tweets. Joining us from New York is Lou Uchitel. He's an economics writer for the New York Times. Good morning, sir. Thanks for being with us again.
Thank you for having me.
Let me begin with your own words from the New York Times this past week. You say, quote, "The nation's economists are cautiously crawling out of their bunkers. The guns for recession are quieter now, and in the relative calm, there is talk of recovery. Vague talk so far, particularly on the subject of hiring. Lots of hiring." Can you explain?
Well, there are signs of improvement. Home sales seem to have bottomed out. There's a tiny bit more consumption. There are generally signs. It's relative, of course. We're going to have the gross domestic product, the economic growth for the second quarter, announced on Friday, and that's, instead of being minus 5.5% as it was in the first quarter, it'll be minus 2% or maybe even minus 1.5%, and we're going to cheer that as a turnaround, as the beginning of an improvement. That sort of contraction in the good old days of normal recessions was considered quite negative, quite upsetting. So in that sense, the economy seems to be improving. It's moving into a stage of much slower contraction, and everyone hopes by the end of the year it might actually begin to grow a bit. But that doesn't mean jobs are going to start coming back. That doesn't mean that at all.
And so to move on specifically, you say, though manufacturing has long been in decline, the loss of factory jobs has been especially brutal of late, with nearly 2 million disappearing since the recession began in December 2007. You say even a few chief executives heading companies that have shifted plenty of production abroad are beginning to express alarm. Which companies?
Well, that particular there was a quote that I have in that story from Jeffrey Immelt, the chairman and chief executive of General Electric. What's happening in this country is that manufacturing has taken the biggest hit of any sector in the economy. The jobs are down nearly 2 million out of a total of 6.5 million, and the output, that is the cars and refrigerators and aprons, whatever factories make, that output is down more than 17%. That's the greatest decline in manufacturing output since the Great Depression, since the 1930s. So if you consider manufacturing important, and President Obama has signaled that he does, then you are in a situation in which we are doing very heavy damage to a very important sector of the economy, and the Obama administration, very gingerly, ad hoc really is the word I used in that story, is trying to take steps to lift that sector of the economy.
So as you hear that expression that there are green shoots in the economy, first of all, are there, and where are they?
Well, green shoots, I think you should call them brown shoots. As I say, I think the main green shoot is going to be that the economy is contracting less than it did before, and that's a sort of a negative green shoot, if you will. It's relatively better than the very steep decline that we had in the fourth quarter of last year and the first quarter of this year. The big problem is employment. There is no surge. We've had a steep recession, and normally when we come out of a steep recession, we have a steep lift in a surge in employment. That isn't likely to happen this time. We are likely to go on even when the economy starts to grow again, and if the forecasters are right, that will begin to happen by the end of this year or early next year. If the economy starts to grow again, the loss of jobs will continue at, say, instead of 467,000 a month, which was the case in June, 200,000 and then 100,000. So we're in for a period in which we have huge job losses for a protracted period of time. Another jobless recovery, except the previous jobless recovery was, we were talking 50, 60,000 jobs a month on average until job growth finally turned up, and now we're talking a much larger number, and that in turn has an impact on the economy. It means that consumption won't be as so great. People will be saving their money because they've lost so much wealth in the stock market and in their homes relative to what they had when this started. So we're going to have a very, very gradual recovery. And always in this sort of a situation, the danger of something happening that will send us back into a double dip or another recession.
Well, a couple of points from the cover story of Newsweek magazine. Daniel Gross, who's the senior editor and columnist for Newsweek. The piece is called "The Recession is Over. Now we need a new kind of recovery," pointing out that, first of all, the Fed can't lower interest rates any further. They're now at zero. And that Americans, quoting him, continue to stuff money in their mattresses. People just aren't spending. So this has to be a different kind of recovery. And I'm asking you if you can point to where this needs to go.
Well, I think it has to go, as it did during the 30s, during the Roosevelt administration, it has to go to government. In the absence of demand, in the absence of sufficient employment and income, in the absence really of confidence, government has to step in, and it probably has to step in with a much larger stimulus package than we have had so far. We are now arguing whether or not the stimulus worked, and there are actually people out there saying that the stimulus didn't work, therefore we should cancel it. I think the real point is we're losing, or we have been losing income, national income, at a rate of $1 trillion a year, and our stimulus package is $787 billion over 2 years. I think we're going to have to come in with a lot more government spending in a short period of time in order to lift the economy and get the private sector going again vigorously. I said, I think in one of the articles I wrote, that it might have to be as much as $1 trillion spent in 1 year, probably on any number of public projects, which would be good for the economy in general, for the market system. It would be a very efficient adjunct, or a very necessary adjunct to the market economy, and it would provide both the demand and the investment that the economy needs to get off the ground.
Our guest is Louis Uchitel. We invited him here in the spring, and we've asked him to come back to share with you his perspective on the economy and his reporting in the New York Times. Our phone lines are open. We'll get to your calls in just a moment. In one of the pieces that you posted earlier this week, you quote Thea Lee, who's the policy director for the AFL-CIO, making this point: manufacturing was the pillar on which we built the middle class, and it is hard to see how you rebuild the middle class without reviving manufacturing.
I think I share that view. I'm puzzled in this country. We seem to think that somehow or other manufacturing isn't important. It was the source of our rapid rise at the end of the 19th century into the 20th century, all through the 20th century. It's the source of the rapid economic strength of the Asian countries, particularly China today. It is a source of tremendous productivity in this country. It's a source of good jobs for people with only a high school education, which is still the largest segment of our population. And it is a source for the goods that we all consume. I mean, we are now consuming quite a bit of what we consume we have to import because we don't make it here. So, and that means, I think, 25, maybe around 25% of the merchandise that we purchase and consume is imported. And if we go on doing that, we will continue to run up a trade deficit. The trade deficit inevitably weakens the dollar, and as the dollar weakens too much, we lose the ability to make such purchases. We decline as a nation. I think the argument that Obama is gingerly beginning to make, and that others I think have to make much more strongly, is that manufacturing is essential in a vigorous industrial economy, and we're letting it slip.
Mickey is joining us.
I would add that other.
Please go ahead.
I was going to add one other thing. This is not just an American problem. I think it's more of an American problem than any other nation. We devote a little under 14% of our economy to manufacturing, and among the industrial powerhouses, including the European nations, of course, but also China, Korea, and India, we're 8th out of 9. Only France devotes less of its economy to manufacturing than we do, and that's going to hurt us in the long run.
And of course, you only have to go to upstate New York or Buffalo or Cleveland, Ohio, or Detroit to see miles after miles of empty industrial complexes. That's
true, and or the other thing we argue now that, well, we don't have to manufacture, we'll invent a new chip and let somebody else manufacture it, and that ignores that most of our innovation, most of our R&D comes from the manufacturing sector, and most of our greatest inventions were done in conjunction with manufacturing. You make a new chip and you walk it across the street at from an Intel R&D center to a factory, and you test it out on the production line to see if you can actually make what you invented, and then you adjust either the production line or what you've designed to make it work properly. The two go together, so there's no way to be an innovative, cutting-edge country when it comes to production and not also to have a very substantial manufacturing base. And that argument, I'm making that not because I personally happen to believe that or think it's correct, but it's an argument that's coming up more and more now in the nation, and I think in the Obama administration.
Our guest is Louis Uchitel, economics writer for the New York Times. Mickey's on the line from Cleveland, Mississippi. Good morning, Mickey. You with us? We'll try one more time for Mickey in Cleveland, Mississippi. You on the phone?
Yes.
Please go ahead.
I lost the sound there for a minute. I am proud of C-SPAN for the opportunity they give us to voice our opinion. What I want to say basically is that President Obama is trying to be a control freak, and he's already gotten one of the major manufacturers in the nation, and he's dictating what they can do and what they can't do. And also, if you leave private enterprise and private business alone, they'll cure all our woes, including health insurance. But we have a president that wants to be, he's a control freak, and he don't want a bill passed that deals with specifics. He just wants an open hand to direct it, because he can keep control of everything.
Mickey, thanks for the call. And we were talking, Lou Uchitel, earlier about Dan Ball's piece in the Washington Post, and he concludes, which pegs in exactly what the caller was pointing out, that President Obama will have to assess the mandate that he has to govern. So whether it's GM and Chrysler in the bailout, or Wall Street, or the healthcare industry, or the economy in general, what's your reaction?
Well, first of all, I think that the most successful economies are market economies, vigorous market economies that also recognize that there is a government role in a market economy, that you cannot divorce those two. The simplest example would be the Erie Canal, or the interstate highway, or or federally subsidized railroads, all of which enhance the private sector, make possible transportation of goods made in the private sector, just to use the simplest example. So Obama is being drawn in this terrible period of recession into a role that the government should normally exercise, and that is the role of supplement to the private sector. And of course, he stepped into the General Motors bailout, of course, because he decided that he couldn't let this huge company go under. And he ended up, the federal government ended up owning the company. It was a reaction, and presumably they'll get out of ownership as quickly as they can. But if if the administration had not taken this step, we would be without General Motors today. and that would have meant many more jobs lost, much more income lost, and it would have become much harder to get out of the recession. So government has a role in any economy, and it has always had a significant role in our most successful decades, 1950s and 1960s being prime examples.
One of the viewers, following up on your point earlier, saying Peter Schiff has been saying this for years. We need to make things again. Jim is joining us from Roanoke, Michigan. Good morning.
Yes. My point is, for years, since 2004, I've been watching the establishment report data that the Department of Labor puts out monthly, and I've been writing to the paper saying that the American economy is being built on a very weak basis because most of the jobs were in health care and food and drinking establishments, and that people were living off the equities of their homes, and that this was not the basis for a strong economy. So that's why I think, because since we're not producing what we're consuming in this country and the kind of jobs that are being created, we were headed for this for a long time. And I'll take your answer off the phone.
Thank you, Jim.
Well, I generally agree with that. When the jobs come back, the estimates that forecasters are now making are that they'll come back in education and healthcare and restaurants and pipeline construction, all of which is good, but they won't come back in manufacturing. And again, we have this issue. Can we consume more than we produce indefinitely and still keep the dollar from collapsing on us because of the trade deficit, the need for that we have the Chinese invest in our securities? That can't go on indefinitely. Eventually, the dollar itself will have to fall, and we will face the problem of not being able to afford all that we want to consume. And that will, and of course, American companies won't invest as much as they should. I want to make a clear point, though, about American manufacturing. When it comes to value added, that is the processing, turning a sheet of steel into stamping it into the hood of the car, which is value added to that sheet of steel. The United States is still, among all countries, adds more value in manufacturing than any other country. But we are also shedding our value added very rapidly. I won't say more rapidly than other industrial countries, although I think that's the case. We've lost, we're now at the share of our economy devoted to manufacturing, as I said before, is actually 13.9%, down 4 percentage points in a decade, according to the World Bank. That's a pretty rapid decline in a sector of the economy that produces the goods that we surround ourselves with.
Our topic is the economy. Carol is joining us from the state capital in New Hampshire, Concord. Good morning.
Good morning. I have three things I'd like to discuss. One, this insurance that he's trying to push down our throat. Is he going to be covered by this insurance when he leaves office or now? Secondly, my parents came from Italy. We were proud to come here. My mother was born here, and she had stones and sticks thrown at her to go to school. But we went to work. We took whatever there was to earn $1 and put food on our table and pay our bills. There's too many damn people in the United States want to sit on their butts and not do anything. Secondly, he's spending all this money, and we're hearing about Medicare is going to go, Social Security is going broke. Why don't they put the money back that they took from Social Security that a lot of people don't even know they took? That's it.
Carol, thank you for your call, referring to President Obama. Uchitel?
Well, I guess I've been a reporter for a long time. I've interviewed for many years, and I've interviewed a lot of people. I'm always in search of that person who wants to sit on their butt and not do anything, just sort of live off the fat of the land or live off welfare or live off something. I never find that person. I find that people want to work, and they take pride in their work. And the more skill they have, the greater the pride and the self-esteem that they have. And so I'm not too much. I don't have a lot of sympathy for that view that we're a nation of some are doers and others are slackers. I think most people would like to have good jobs, skilled jobs, and I'll again go back to manufacturing here rather than deal with in health insurance, other than to say about health insurance that we are the only industrial country without a national health insurance system, and we inevitably now must join the ranks of other nations. How we're going to do that, I'm not going to get into the details of it. I'm pretty confident that this government will, the Congress and the President will, if not immediately, then over the next year or two, produce a health insurance system that will take its place alongside Social Security and Medicare as one of the jewels of of our society. I do think that we have to concern ourselves with the wealth that we generate in this country. And I think one of the major means of generating wealth is manufacturing. It's also one of the major sources of skill, not just welders or electricians or plumbers, all of whom are in short supply, by the way, these days, but engineers and physicists and chemists, all of which are skills that are attached to an industrial economy, and skills that we have relatively neglected over the years, and yet recent years.
On that issue of job growth, you write this: so far, Mr. Obama's administration has not come up with a formal plan to address the rapid decline. Instead, it has pursued ad hoc initiatives, bailing out General Motors and Chrysler, for example, in pushing green energy by supporting the manufacture of items like wind turbines and solar panels. We'll hear from Frank, who's joining us from Bradford, Pennsylvania. Good morning. Welcome to the program.
Good morning, Steve and Lou.
Good morning.
I'm happy to say
good morning.
The hospitalization, the insurance is killing the industry. And if we don't realize that, when General Motors says they'll build a plant in Canada, and GE says the same thing, it's because they're avoiding the tremendous cost that is a burden on our manufacturing. We have no recovery until manufacturing restored. The insurance costs have to be taken off their back. Insurance companies cannot be treated like they're the military-industrial complex. Nobody wonders why 1,300 insurance companies have a multi-million-dollar CEO, boards that eat up the insurance money, and these costs are forced upon business. There's no recovery without insurance being corrected. It sounds brutal, but I would like to say something about the blue dogs. Where have they got their noses? Aren't they interested in seeing manufacturing restored? These companies have to compete. They cannot continue bearing the burden for all this insurance. Thank you.
Thank you for the call.
Well, there is an issue there. I'd like to think that we will have a recovery. It might not be as strong a recovery as we would as we're capable of. I also like to think that we need, many people feel this, national health insurance just as a question of equity and a question of of joining the modern age, if you will. Our health insurance system worked very well for a very long time. Its day has passed, if I may be that general, and we are now entering an era in which health insurance has to be a public responsibility, or that's certainly what the Obama administration is putting forth. I am concerned that the Obama administration is coming slowly to the idea that it has to have some sort of manufacturing policy. There's a great fear that if you have manufacturing policy, that means you are going to choose winners and losers. You're going to save General Motors and somebody else will go down. I think we shouldn't think of it that way. I think we should think of it as manufacturing in general and what we should do to support it. what the government should do. I think that should be part of a national debate. I certainly, the Obama administration seems to be meeting each situation as it presents itself. And of course, in energy, there will be opportunities to make solar panels and wind turbines. They're also being imported, by the way. And policy has to evolve that addresses the issue of what should be made here and how much should be imported.
You have one fan out there, this tweet comment saying Mr. Uchitel has the common sense that is rarely seen. His comment about lazy Americans is great.
That was a comment that said, I don't think Americans are lazy. I've interviewed a lot of people who are on welfare, and I have yet to find someone who didn't want to have a job, a good job, something that gave them self-respect.
Charles is joining us from Oakland, California. Good morning. Welcome to the Washington Journal.
Hi, thank you. I just want to say that Fox News Network put George Bush in office with a lie, his first cousin. We should be after him. We should be after the Bush administration and Dick Cheney for all the damage they've done to the country. Do not forget that.
Thank you for the call. Let me go back to the economy. David Ignatius this morning in his piece, Lou Uchitel in the Washington Post, Life in the Rehab Economy. He says the stock market's surge last week could almost make you think that the go-go years are coming back. But listening to the Obama administration officials and business leaders over the last few weeks, I drew a less rosy picture about our economic future. He says our recovery is likely to be a V shape, so wide it will look like an L, gradually sloping upward as America recovers from the long debt-fueled boom that began in the 1980s. What's your perspective?
Well, I think I don't really have a perspective. I think we're going to not have a V-shaped recovery, one where we have a rapid recovery. I think it will be a slow recovery. I think it will be subject, and I think that we might even have a double dip. I think we're not into a recovery right now. We're making that assumption that the worst is over and the recovery is ahead of us. And I worry that if we don't that the private sector is not yet capable of generating the demand, consumption, and business investment that the economy needs to stop contracting and beginning to and grow again. And that has to be recognized and debated, and we have to decide what other, you can call it stimulus, what additional stimulus we need to make this happen. I would rather call it public investment. We have huge needs in transportation, in energy, and all sorts of sectors. I'd rather see it as a debate that says, what must government do to enhance the private sector, to make the markets work better? And energy, clean energy is one of those things, obviously, and that would be one way for the government to both invest and at the same time, and in doing so, lift the economy. I think there should be a debate over public investment stepped up at this moment when we really need it to lift the economy.
Brad is joining us from Atlanta, Georgia. Good morning.
Good morning. How you doing?
Fine, thank you.
When everything is said and done, you can argue till the cows come home. But I've got a little poem I've come up here with. It won't take but a second. When the world will fall, governments are making that call. Getting worse day by day. All that we can do is pray. Peace, not war, should be our creed. Governments care less of our needs. Take care of your own should be number one, or if not, we'll all be done. They won't put dollars into the human race by spending billions in outer space. Asking for help, they say we'll pass. Reality is they no longer have a grasp. It's always in God's hands to keep or destroy all the lands. So thanks to them, with all their need, the world will end along with greed. We're supposed to be in this thing together, and if we don't, things are going to change real soon. Thank you for your time. Hope y'all have a wonderful weekend.
Brad, thank you for the call. There's a comment, not a question, in that Lou Uchitel, but did you want to respond in any way?
I wish that we could get rid of this idea that born in the Reagan years or even in the Carter years, that government is the problem. Government is and markets together are the solution, and both play a very important role. Neither should be demonized.
The final tweet is along those lines with a very simple question. Do we, referring to the government, need to regulate speculation? And will we see more of that in the year ahead?
Well, we do need to regulate the markets. We need to regulate lending practices. Yes, we need to go back to a series of regulations so that markets don't get out of hand. Just in the when Greenspan was the Fed chairman, there was a 50% margin requirement. That is, you could buy stock putting up only 50% of the price of the stock. And the market was getting out of hand, and there was a bubble developing and so forth. That was a moment, I would say, when margin requirements should have been raised to slow down the economy. That's one issue. And without going into a lot of details, there's hundreds of different ways in which the market must be not controlled, not interfered with, but regulated so that it doesn't get out of hand.
A veteran of the Associated Press and also a former journalism instructor at Columbia University, our guest Lou Uchitel, who has spent the last 22 years at the New York Times. He's also the author of the book, The Disposable American, Layoffs and Their Consequences. Thanks as always for being with us.
Thank you for having me.
Please come back again.